I'm having a technical issue here, guys, so please stand by. Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Hope you're all having a good day. I'm having some technical problems here, so things might get a little strange. Anyway, I hope you're doing okay today. I stream live Monday through Friday, 11:30 to 1 p. Standard Time, and the stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. I'm going to try to get into it here, and things might get a little challenging, so I hope you'll be okay with that today. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is for educational purposes only. However, we do review in this stream Trader Lab structured trades. Plus, helping to develop an understanding of how the market works, why it does what it does, and how at times you might get in alignment with it. And the thing about trading is that it is a business, and is a business that you might consider is a statistically based business, not a predictive one. And there's quite a bit of a difference between statistics and market behaviors and randomness. Let's accept maybe for a moment that what happens in the market is random. We really can't predict what will happen, though we can learn to anticipate what might happen. And if we can also attach statistics to what might happen, it may help us develop a better probability of one thing happening over the other. And that is how it relates to gaming. Gaming is a statistically based business. And if you approach the trading business somewhat as a statistical game, if you will, or using casinos as a model of a successful business that only plays games that have an edge that favors the house, and they play them exactly the same way. And over time, even though the gamblers walk out with cash, they do extract dollars from the gamblers. And if you can approach a business model that's already proven, and then we use that model for our business with statistics and accepting random outcomes, maybe over time we can extract the dollars from the other participants, not on the next trade, but maybe on, or even the trade after that, but maybe over time that edge will show up. And that is, and the variable in that, of course, is doing the work to know if you have an edge. Hold on one second. This is getting noisy here. To determine, do you have an edge? Where does it show up? And then developing the discipline in, despite how you feel about your fear of loss, which is normal, managing your emotional states so you can actually play the game to extract the edge. And what happens, even for many traders, the psychological component supersedes everything else. You can develop a terrific trade plan, but if you can't execute it, then what, then you don't have it. So it's a confluence of pieces. This is what the Trader Lab is about. So let's get into today. Market has been rather bullish, as you guys know. We've had a lot of volatility the last couple of days. Yesterday was quite volatile, and we gapped, so we opened above yesterday's high. Now, that sets up a couple of things. Let me just make sure where my levels are. Gotta have the overnight high in here someplace. Hold on. Whoa. Must be covered up. Hold on, guys. I gotta find the overnight. Oh, I think we opened at the overnight high. Okay. One moment, guys. Still a little trouble here. Okay, sorry about that. So we open in a gap. Now there's a couple possibilities. Fill the gap. And if you remember, this was our target for yesterday, just saying. And that was yesterday's high. Now the fact that it was, that's like we say, maybe, Trading is maybe. In other words, randomness. We don't know anything else. But here's a couple of things. So you gap, you can fill the gap, you can go higher, or you can just gap and run. And then the idea is that if the market's long, then there's always possibilities. And that's all we know is possibilities. The overnight mid and the overnight volume point of control, which is here. Now, let me give you some statistics, and you guys have to bet these for yourself. So we opened higher outside of yesterday's range. There's a 76% probability we'll check the overnight high. Consider we opened there, not too far, not too much of a reach, right? Then we have the first hour's high at 68% probability, which is there to check it. Getting to the previous high or low, 63%. Well, again, 63% probability. The overnight mid, 62% probability to get down there. The overnight volume point of control, 79%. Now they're in the same place. So we have high probability to get here. Down here is a high volume level, 4250 from previously to yesterday, but I keep it on my chart. Yesterday's settle. Now this is interesting, 5635-ish. This is called the naked volume point of control. This was the highest retail price yesterday, or highest volume. And high volume, based on auction, if you will, is where buyers and sellers are willing to do business. So there's a lot of transactions, and that's kind of an area of agreement. So we settled above it. So this is what's important. And when we open, we are above the ETH volume point of control. So RTH volume point of control, ETH. So it's right in there. So that's higher than this. And our open, which I think I just lost, is higher than all of that. That suggests higher, as you can imagine. But the question becomes, based on the statistics, if we go higher, and we don't know this, so this is part of the joy of trading. It's always maybe. If we go higher, we're either going to keep going, which is fine, or if we find our sellers then the longs who are early buyers can get taken out, and then we can start coming back to these high probability levels. So this is the main levels initially. I hope that makes some sense. Now, if you have questions, by the way, post them. If you have technical questions as far as how to, about Bookmap and how to use it or how to operate with it, as far as the technical, support questions, you can go to support, send an email to support@bookmap.com, or use the link in the bottom of YouTube and come over to Bookmap Discord Trader Lab community. There's no cost for that. And then you can download the PDFs of these structured trades. Hold on a second again, still having trouble. And also ask questions or go to support. There's quite a good support team for that. So let's focus here on the Trader Lab and structured trades. So this is the RTH open right there. So market comes down. Now I'm going to get into microstructure. How we do there? I'm having a problem with a monitor here. So you understand, you probably can't see it, but my monitor's flashing on and off. It's kind of a strobing effect. And, back in the disco days, that might have been kind of fun, but not so much now. So it should not be doing that. It's not supposed to go to sleep, but this one is tired, so I don't know what's going on. So I hope you can see everything here, and I'm hoping I can see what's going on here to talk to you about it. So this is called developing volume point of control. It shifts down. That is saying this is too high. I label it. It's called a variable high volume node. Remember, I made these things up because I started doing this a long time ago, and there was nothing out in the retail space that had any of this. So I just sort of had to make it up. And I made it up because when I learned market profile from Peter Stottlemyre back in the mid 80s, like everything, you learn something and then you're kind of rigid. It's like dogmatic. It's this. Okay. You get taught something. It's this. Well, it wasn't. And over the years, I observed behavior and I didn't understand it. In other words, it didn't fit what I was taught about market mechanics. And then I started asking other, quote, aficionados in the profile world. And the things that I was observing, they said, no good. But yet I kept seeing them. So, in fact, just a little fun facts while I'm going into this here. So this is our sellers, by the way. So sellers, and when this moves lower, it's saying that price is too high. Now we're in 10 seconds. So this is in and of itself is not a reason to do anything. I am over yesterday's high. I have a gap. So do I want to get short? Not necessarily. In fact, I want to be long, so I'm looking for longs. Now, here's what else I know. This is the opening swing high. So what I know is if I get sellers and I'm in a gap, why might I get sellers? Well, anything can happen. It can gap and run. It can gap. You'll get what's called responsive selling, maybe a gap fill, maybe, or come inside yesterday's range, right? But if I have what looks like a bullish situation, then I want to consider getting long. So for me, I'm looking now, my opening swing is here. If we get shorts here, so we have the potential for this. I spend time on this because this is important, not to predict because you can't, but to suspect, because all you can do in trading is anticipate behavior, not predict what will happen. So in the Trader Lab, I always talk about you have to anticipate to participate. And in a trade plan, for me, I have scenarios. In other words, if it opens, blasts, pulls back. For example, if we opened here and this was here and it blasted up and pulled back and checked it and I see more buying, I'd be taking a long. If it opens here, comes down, I'm not taking a short unless it's in my plan. I'm saying stay away. When it crosses across here, now I'm looking to see, is this too low? And what's my opening swing here? If I come across and take out the opening swing, then I'm looking for longs. And it's as simple as that. So, and why? The fuel is here, buy stops. If I got shorts in here, and there's always buyers and sellers, I know there's stops here. So right here, now right here, I get my VPOC migration, and I'm having choice words. Why? Because this is where I was looking to get long. If this is too low and I break here and test it, I now have a level to work with here, and I know that this is too low, maybe, and definitely that would be too low. So instead, I get the blast, and of course that's not very exciting for me. And then I have this. Well, I don't want to buy it here, but what it's telling me at the time is this is where the volume is, and the buyers and sellers are willing to do business here, and that at this moment, in this time, in a developing time frame, these are too low. So now I got to get long. I go, oh, great. Where am I going to get long? Well, I got VWAP in mid. So I got long here with a scale here. And then I'm holding. And these are structured trades. Now, it doesn't mean it's your trade. I'm just talking about mine. But the reason I kind of do this way is I don't use indicators. So what I'm trying to do is get in alignment. By the way, this is the opening swing low also, so let's not forget that. And I have targets, so I just trade the targets. But what do I know here? This is too high. So right here, if the volume is up here and we leave it, think of it like a store. Let's go the other way. If the volume down here is too low and you can't buy an S&P here at the moment, and we leave it, and now this is retail, and we leave it, and we get over this, which was too high, and we leave it, then too low. Let's take the opposite side. Here, the price is too low because we leave it. Here, the price becomes too high, which I don't know, but we leave it. So now I know too high, too low, VWAP, and mid. Now I'm using order flow to try to find a location to interact. So I'm going to look here because I had my buyers here. I have my sellers here right now. So I have buyers, they're absorbed by the sellers here. I have my volume here. It's too high. These buyers, this is delta, and I don't know because this could just, here's what could happen. I could hold here and then come back here. Okay? So what did we do? I see my seller. This shifts down, too high. Now, couple things. I can cross above and go here, or I can break below and come here. Here's my sellers. My buyers now are above my sellers. I come down and check. Is this too high? At the moment it is. But this is the VWAP and this is the mid. So I know if I get out here, I can potentially come back here. But my real issue and what I am looking for to scale, because I don't have the range. If this was further out, I'd be scaling against here. But what I know is that was too high. My buyers were absorbed here. My sellers are absorbed here because my buyers are above them. When I come back here, right in here, and I see my buyer, and this buyer is above here, you could take a long here, you can take a long in here. It's all subject to your plan, and you got to get risk neutral here. So I'm just explaining that. Now watch. Where do we come back? Here. Where were the sellers absorbed? Here. So for us to go higher, what has to happen? I got to get above this. Watch. So what happens? I hold the VWAP. Sellers are absorbed here. I come up. Now here, I'm thinking happy days are here again. Why? I got above this. So you could see if I get long, I got to scale here. Now right here, now it breaks here, and I'm thinking, okay, and it comes. Where does it come? Here. Now the teeth start to chatter because I know now all we might have done is squeeze, and now this is called mean reversion. And now I hold here and it's got to clear this mean reversion, and I'm getting not happy. Just saying, you know. So I've got to hold this. So I come back up, I come across, and I'm thinking, okay, I'm good now. And what does it do? Comes back under again. And now I get taken out. So I got my scale and I got taken out. And I'm going, you know, so and so. So now I'm saying, what is going on? What is going on is the question, right? Well, this is a mean reversion trade outside in. And basically, we're going to this, and we have targets. I have targets up above. I'm just saying, I'm trying to get here. This is my target. It's a high volume node in an intermediate time frame. So I'm looking at 66, 67. And I'm going, well, I think that's where I want to go. So I come outside. Now, don't forget, I had aggressive buying over here, and now I'm in rotational trade. This is a change in context. So now I'm going to look at this, and this is the volume profile. And what this is, here's what we know. We know at the moment, now don't forget, the gap is open, and we have our targets below. So it's a bit of a conundrum. So this is now the retail price. And so I've got too high and I've come across it. This changes the context. Basically now we're in something called potentially mean reversion, and that changes to outside in rotational trading. So I've gone from a directional and a continuation trade, and once I come back and break under, when you see this and we break under, now the potential is to do this. It is a change in context. So as far as I know, and I am conscious that I'm conscious of all the possibilities. The only thing I have that I can't do is predict what's going to happen. Still working on that, and actually not. So let's look at the microstructure. So I come down, I see my sellers. I see buy icebergs, I see sell stops coming out. I see sell stops coming out. There's less stops here. I see micro high volume right here. I'm going to put a little line on the chart. Now, what I'm going to try to do, and as of course mixed results always, is I'm going to try to take a long for this. So what this is called is a context in a context. So at the moment, and remember, context is a fluid condition. At the moment, the trend is up, and at the moment, I haven't filled the gap, so there's a little bit of concern about that, but I cannot be fearful. I have to follow my plan. If I cross outside and I see a buyer, and what I see is absorption, icebergs, I see more sellers, I see this, and it looks like it's going, to zero, right? But what happens right here? Right here, I have volume, microstructure. This is a micro consolidation. Now, this takes skill, and by skill I mean just practice to recognize what it is. So right here, I break above these sellers. I took a long here, and I was looking for this, because this is the last area that was too high. See it? Now, this is advanced, but this is Trader Lab. And here's the thing. Should I be willing to take a stop? Yes, I will. Because if I'm not willing to take a stop, I certainly can't trade. So, but look what I'm leaning on. This is what I want you to see. I'm leaning on this. I'm leaning here. So that's what I'm leaning on. So if I get long here, my stop goes under here. And the better trade, by the way, in hindsight, I can tell you what the better idea would have been. To use this absorption and this volume for the entry instead of entering here. I entered up in here and I was annoyed because this is my scale. There. That's why I label these things. And then it's got a, the idea is to come out the top and keep going, So what is this here? This is going too high, too low. Takes it out. Okay. So here, get a scale, get taken out. Same trade. Take a long here, back to here, scale. I was starting to get, annoyed, right? So it takes it out. Now we have the report. So nothing here. And then everything starts falling apart right here. So that was that. Okay. Now those are longs. Once we get the report, and where do I come back? Notice. So any of my longs, I'm coming back here. Actually, I did have another long. Forgot about this. So I got taken out. I get another long here. I did take this one. I got a scale and I got stopped up. It all went bang, bang. It was just like that. And I did not get short. Did not have a short here. So now I'm into, okay, this is great. Now I have my variable high volume nodes. I have taken out the opening swing low. It changes everything. And now the context is short. This sets up right here. So right here, we break, we come inside. Let me show you what else is going on here. I have a high probability statistic at the overnight mid. So now, and I broke inside of the range. So what do I do now? You're asking. I'm asking myself the same question. Well, this is the retail price. Now, I don't remember if I talked about this in the Trader Lab. This is a long if it's in your plan. Or, here's the other part of it. It's a short up here. This is called mean reversion. And there's two ways you can trade this. And by the way, I'm going to look at your questions here in a moment. I apologize. I'm trying to, I don't think it's flickering on your end, but I have flickering going on. So, but I want to point this trade out there. Now, there's two ways you can operate in this. And then I'll come up for your questions if you have them. Please post them. And if you're in YouTube, by the way, hope you're getting something out of this. I'm sharing structured trades with you and derivatives of structured trades. Let me explain what you're seeing here, because it's kind of neat. When you're going outside in and outside in, it's called mean reversion. So what's too high, which is that, right? You come outside, what's too low, and you revert. You come outside, you revert. You get too high, you revert. You revert. You revert. Now it breaks, and down you go. Everybody jumps out the window. What are we going to do in a fractal? Let's look at this right here. I'm going to show you something interesting. This is auction market theory. And all I'm doing, and I don't use indicators. What am I doing? Well, I ask myself what I'm doing also often, especially, when I take a stop. Am I doing what my plan says? And then I go, well, yeah, if that's what you're supposed to do, then that's what you're supposed to do. So this is what, and this should be over here. Okay, it should have this in here, but I'm just showing you a consolidation. So what happens here is, it's going down. I see my sellers. I have a buyer here. They get run over. I see my sellers going to zero, right? Now there's a change in behavior. All of a sudden I get my buyers, and this is absorption. Now, I only know in hindsight. I can't predict anything. I know right here, I have my sellers. I see a buyer here. That's absorption. We get below this buyer. So as far as I'm concerned, this is still going lower. When I break above this and this sell delta, then it's a potential change. And you get something that looks like this right here, this here. This is the volume. And in the middle of the volume where it's chop, chop, this is an auction in micro time frame. That little node sticking out right there where the line is a high volume node. And this is the same thing in a higher time frame or fractal. I don't think a time, but let's just call it a higher time frame. This is developing daily time frame. this is developing microstructure. You'll notice that this rotational thing is the, if I leave this in this time frame, it is saying potentially too low. If it becomes too low, where might I go? I might come back and check what's too high. And that could be here or here. But this is the mean. This is like a micro mean. We test. Right here, I took a long. Now, I'm not saying this is a good idea. You know, it's just one of those things. So I took it to here. Now, when it comes back here, I have a couple choices. First of all, the trade was only to here. And then it's, if I get above here, then potentially come out the top. That's a possibility. However, let me give you the however. I have a statistic down here. This is how statistics help. And again, it's all random. A 62% probability for the overnight mid, and covered up by the overnight mid is the overnight volume point of control, or retail price from the ETH, highest volume. Almost an 80% probability. Past performance not indicative of future results. So here's what I know. Microstructure for mean reversion, back to the higher time frame, and if this is too high, mean reversion back here. I'm trading inside. Now, this may be confusing. It has always been confusing for me because I don't predict. But what I know is how the market behaves and why it goes to levels. It doesn't mean it will, and we don't know how, and we don't know when or even if. So, but when I see structure, am I willing to try to enter in here and put a stop under here? Is it worth it to me from a risk-reward ratio to get scaled ahead of the mid because I might get sellers right here and get carried out, or squeeze out the sellers at the mid and the VWAP, but I have to scale here because of potential continuation down. And then if I get through these stops over here, then I got this. And if I get above that, then I keep going. If I don't get above that, it's over. So what do I see? By the way, before I go on to the short from here, questions? Any questions in the Trader Lab? Yeah, CFJ in the Bookmap Discard Trader Lab community. Thanks for the question. He's asking in mean reversion. Mean reversion is rotational trading. This outside in trading, which is the same thing we were doing even when the rotations were compressed. This is the mean. So the mean is in here in this structure, and this is the mean in a higher time frame. So pull back and test the mean. See if you don't see something. By the way, I'm going to answer your question. I test the mean, and then I go the other way. What do I do here? I test the mean, and what do? I go the other way. These are the same from opposite directions. Now, the question was, if we are long and we see VPOC migration, this is called VPOC migration. It's language. Remember, no indicators. So if we're using language, then we have to think about what's it say. And again, sometimes it's clear and sometimes it's ambiguous, and other times we just get it wrong. And it's not getting it wrong. It's just that our trade plan, which is random in the sense of the outcome of any individual trade, may or may not give us something useful. Or we take a stop. And the point in Trader Lab is it isn't all in, all out. It's a minimum 2-lot configuration. The job of the first contract is to buy the stop. So the distance from entry to failure is the distance minimum to get risk neutral. And then if the trade fails, before you get to your next target, you scratch and your broker sends you the gift basket. But I have to, if I enter and my stop is here, I have to scale ahead of this, which is what I did on this trade. And then it's here. Now, by trade, I'm just going to tell you, I only traded to here. That's all I did with this. And I was willing to say, well, the fact we fell out and I had the statistics below me, I considered this a counter trend trade, just saying. And if you don't have a counter trend trade in your plan, then, and this was mean reversion trade. If I get above here, it keeps going, and I have other trades to get aligned for continuation along. Now, the question was, when I see VPOC migration, do I exit? Here's what makes me exit here. Well, I was exiting here, but let's assume I had another runner, okay, going for this, because that would be the next area. If I did, right here, let's look at what we see here. So I also read order flow. So I know what this is. It's my target for mean reversion. If I get above it, I just come out the other side and squeeze out the shorts, okay? We know that. But what happens here? Where's my buyers? So I see my sellers here, right here. So let's look at what we had here. Sellers took a shot here. They were absorbed by the buyers down here. Consolidation here. The buyers are here, having a good time. This is too low. I come up right here. I get some exhaustion. I get my counter rotation. I get my sellers. Buyers try here, not so much. I get my sellers. Now, I still don't know what's going to happen. I know this is too low. I know my buyers were here, my buyers were here, and my buyers are here. These guys have a little pain going on. I'm above my VWAP, I'm above my mid, and I have this, the mean. And again, nobody knows. So I manage my trade. What I do is I look at these, and this is just an idea. It's not a recommendation. So on the way up, this is an auction. If it's too low and we leave it, I can now look at this and go, there's the auction in that fractal, and there's the volume. It was too low. Now I'm over here, don't forget. Now I come up here. I break. Now what was too low? Well, it's down here. Chop, chop, chop. Here, let's just look this way. So this is too low. I break high. Too low. Right there. Stop is under here or right here if I'm chicken, and I'm always chicken. So now I come up and I get my chop. The high volume is here. Where's my support? It's down here. That's where I'm hanging out, and I'm teeth chatter like everybody else. Now what do? I come up here. Where's my volume? It's here. In the higher time frame, my volume is there. So that's my target. Now, right here, let's come over here. So I have this, which now let's look at this one. You see the same thing here, right? And that's what this mean reversion thing is. So for this thing to work and go higher, I have to get above this high volume. So I'm in the higher time frame, developing daily time frame, and inside of that are these little fractals. So, and you see this little thing here, this rotation. It's the same as this. It's just this is higher time frame, and this is what I call microstructure or fractals. So this little thing here, up, down, is a consolidation. This is the same thing. If I can't get over this, which is the same reason I held this from the top, if I come up from the other side to this, higher time frame, more volume, this is more meat on the bone. And if I can't get through here, then there's trouble. Now, let's come into the microstructure. So this is the high volume here. And now I'm going to look at the microstructure. I know this is too low, and I know right here is an outside edge or low volume node right here. Outside edge of the consolidation. Same thing as out here, outside edge of the consolidation. Break high, outside edge of the consolidation, the sequential kind of a movement thing. So I get here, okay, now I'm in the microstructure. The micro volume is here. So right here, don't forget, I'm out of the trade, but we're going to assume I'm not out of the trade. What do? VPOC migration. What is this? Let's label it. It is a variable high volume node, right? I'm following a process. I am not predicting anything because I can't. So I know now I got buyers here. I see some stops, fine. And I need to clear these guys. I have my sellers below. Keith's chatter, too high. Now let's watch. Volume is developing right there, right there. Let's just watch the behavior change. Not good for the long. So right here, micro volume, VHVN, the market has to clear this. I see my seller here. These guys are absorbed. So right here, my sellers are now below my last buyers, which are here. My micro high volume now is here. There's a buyer. So I got a seller here. I got my sellers here. For this to go higher, I got to clear this and squeeze these guys right here. What happens? The opposite. This is time to get out of Dodge. And this is resistance. Let me get this out of here. I'm going to show you something that you might find interesting. And then I'll look at your questions. Thanks for your patience. Sorry about that. In the meantime, my screen is flickering over here. So that's, you don't see it because I got multiple monitors running, and I'm not on the monitor that's projecting. So it's just the way I'm set up here, unfortunately. Okay. So right here, remember, too high, don't know. Microstructure, break low, come back. Microstructure, right here, break away. Now, what is this? Let's look at this right here. See if this doesn't look familiar to you. You kind of get the idea. So, chop, chop, chop. Microstructure. This is mean reversion inside of a fractal. The whole move back to this is the same thing in a higher time frame. The sellers are here. Now, right here, no clue except here. As soon as I break out of this micro consolidation, this high volume is the same as that. There's my seller. There's my pullback. I'm out of it here. And it's a short also. Your stop has to be here because now we're going for statistics, which is the overnight mid and the overnight VPOC. Yeah, that's. So this was the next target down here. So for me, this was my next target. Now there's more, but before I go on, questions, and thanks for your patience. CMG, did that kind of clarify it? I want to go into the minutia. Why not take a short on the top? You mean the high of the day, Moses? Is that what you're asking me? Well, I can answer your question. I don't take a short at the top because I don't know where the top is. So, not my skill. My thing is getting alignment. I can't predict anything. I just kind of, I follow the way I kind of, a little term because this is yellow, the developing volume point of control, follow the yellow brick road. This is the yellow brick road. These are the yellow brick road. And when you break below them, it tells you something that the auction or the valuation has changed. While we're going up and leaving these behind and making higher volume, VHVNs, then everything is north. When you break below them and you come back and you can't get over them, then you're rejecting them. So for me, there's scales, not necessarily shorts at that time. Once it changes, now I'm using this like I would use a VHVN. And when I'm returning to it, because the context has changed in the more higher time frame, which is really what I'm trying to align with. Now I'm back to my statistics, and I'm going for this. Now there's more trades here too, which, did that answer your question, Moses? At the edge of the top? I don't know where the edge of the top is, Moses. If you do, let me know how you know that before. I mean, it's okay, I mean, I hope you can do that and draw up a screenshot as far as how you anticipate the top, because that would be useful for all of it. How we doing in YouTube, guys? Hope you're doing okay. Thanks for visiting Trader Lab. If you are visiting Trader Lab and it's your first time here, appreciate you stopping by. This stream's based on structured trades. I'm just going to show you. These are available to all of you in the Bookmap Discord Trader Lab. There's a link in the bottom of YouTube. These are these structured trades. Now, these, this is not plug and play in the sense of mechanical. It is contextual. And the setups, if you will, are structured trades. What they're about is alignment. In other words, there are trades that you would take potentially based on your perception of the alignment. Like this is actual trades, that I take. And a lot of traders are asking me, what are you doing? And I'm saying, well, here's some ideas. And, I'm not a vendor. There's no cost for this. But I'm basically doing what are in those PDFs and the library of webinars that's available to all of you in the Bookmap Discord Trader Lab community. And there's no cost for this. It's 24-hour a day, 7 days a week. And it's a group of like-minded traders that have come together to leverage their collective experience. In other words, together we do better. And this is really about building out the business of trading. Trading is a lot more, I think, more difficult than most people think it is. It's not based on indicators as a primary input. It is based on understanding market mechanics. Indicators have a place. But if you don't understand why the market behaves the way it does and how you can get in alignment with it, then you may not be able, your indicators may lead you down a path of that might not be sustainable. Let me put it that way. And that's what most retail traders do. So anyway, I hope I answered your question. Now, this is a target, overnight mid and volume point of control. Overnight volume point of control. And remember, that had about a 79% probability. Now there's more. Now, the statistics initially favored the upside. So when you open like where we opened, it can do, a couple of things. So after the report, everything went south of the border. So, okay, now what? Let's go further. If you have any questions, post them there, by the way, guys. And please, if you're in the YouTube, please click the thumb up. If you're getting something from this, gives me a little encouragement to continue doing this. I do trade full time, and but I cannot trade when I stream. It's very rare for me to initiate. I will manage trades. In other words, if I'm in a trade, that's fine. I can manage them. That's pretty easy to do, relatively speaking. But initiating is a whole nother issue. Now, let's take a look. Right here, let me just see where this came from. I'm wondering if, let me just look at something. Okay. Now, when I draw these lines, I don't know exactly where they come from. That one, I think, came from the ETH. I was active in ETH, neither here nor there. So this is this chop right here. It is right. Let me just get this here. Okay. So right here we have the volume. Okay, and I put this. I believe this. And now we're looking at something called potentially mean reversion in a fractal. And I have this as now resistance. So overnight mid, overnight volume point of control are here. If I get below it, it sets up the possibility to come outside and test it and rotate. And this could be potentially near the low of the day, and then we can come all the way back and mean revert. Or if I get below it, I can then continue. And right here, I don't know. So let me show you. This is the volume. Let me show it to you. Now, I'm not saying anybody should do this or even you'll understand it. I understand you won't understand because it's a way to think differently, independent of your indicators. It's the way to recognize behavior. Consider this a language. Now, an indicator's fine. What it is an indicator's measuring a derivative or price of some fashion, right? And that indicator is just translating what this is. What I'm doing is translating also, but I do it in real time. And instead of a backwards looking indicator, I'm using order flow and auction mechanics. In other words, participant behavior. So I'm at this level. So I'm in this real time level. So it gives me the ability when I see behavior to narrate it. And when I see absorption here, I know right here that, and I don't know what will happen. Here's what I know. Let's look at what I know even right here. I'm just giving you an example. I have sellers here. So I got seller, seller, seller. That's absorption. And a buyer underneath. That's delta. Does the seller consume the buyer and we keep going? Or does the buyer consume the seller? And the buyer consumes the seller. What was up here? The buyers were consumed by the seller up here. The buyers were consumed by the sellers up here. You see how it works? Sellers are under here. Buyer comes up for oxygen. Sorry, you're going down again. Sellers here. Come back up. Can't get above that buyer. Absorption there. Absorption here. Sellers take over. Now I have a buyer here. And I have sellers here. No, they were absorbed. What happens here? The buyers take over. And it's a fight. Sellers are here. Buyers are here. Watch. The volume is here. I come up. I've got my buyers here. Where are we going? Sellers take over again. There they are. Buyers here. Sellers here. Sellers here who are absorbed. Now here's the thinking. I'm just giving you thinking. If the buyers thought this was a good price and the sellers, this iceberg actually, got absorbed, is it possible, and that's all you got, is it possible that the buyers who thought this was a deal, oh, it's on sale, and the retail price potentially is right here. If I come outside, this is mean reversion. If I come outside, this is mean reversion. The buyers were here. The buyers are here. No way to know. Now the buyers come in again. These guys are under the bus. That guy and this guy. If I clear this, then it sets up a potential reversion. So let's watch. The buyers are here. Just watch. The buyers are here. See? Now, I'm just giving you something to look at. Now, I'm not saying anybody should do this, you know. Where's my last location up here? Let me just throw a little line up here. And I'm going to show you a couple other things very quickly. So right in here is the last microstructure that was too high. Let me just show it to you. Because what I'm doing, as this thing is doing its thing, I'm reading what's happening in here. So right in here is volume. Sellers take over. Right in here, this chop, chop, chop is volume. So these are all micro consolidations. What do we think of this? Nah, I'm not paying that. Too expensive. Bang. Do another one. Consolidation. I'm not paying that. I'm out of here. Okay. Come down here. What's here? Boom, boom. What's this? Consolidation. And does it change? That's what you're looking at. Does it change? Too high. What do I do here? If I get above this, it changes things. What do I do here? It tests, and there's the absorption. This is how I'm using the order flow. Now, let's not forget what I know. What's above me? Now, this is not a long. I'm looking for a short. And what do we remember? You do remember this, right? What is this out here? Well, this is too high. And now this might be too high right here in alignment with this. If it's too high, I would take a short because now I'm going for this next target. Are you guys tracking? And here's the short. Let me show it to you. So here's my, remember, location. This is how this comes together. I know you're probably thinking, oh, there's too many pieces. Actually, it's only a matter of you staying in a narrative and keeping track of the real-time behavior. Here's a buyer. Oh, my goodness, going to the moon. But what do I see? Micro high volume. Where is it? Now, here's what's important. I don't trade anywhere. It usually doesn't work for me. But this is what's important. It's a level. So what this tells me here, if I don't fall out the bottom, I can potentially, and here's what's going on. You see this? That's too low. What's the retail price in here? It's this, in this whole thing. What's too high? There. And what's that aligned with? This. So I come back and check. It's also the ETH volume point of control. Remember what the volume point of control was. It was the retail price. In any of these structures, if the retail price is too high when I come back to it, which is the reason we left it in the first place, and it's still too high, I'm going the other way. The ETH volume point of control was right. It's under here, so you can't see it. This is now potentially too high. And if that's too high, this location is the yesterday's RTH retail price. So if this becomes too high, I can come down here. So, short. Just watch. Right here. I took that short. And then I get VPOC migration, saying everything above is too high. And look what we do right here. So look, this is too high. This becomes too high. Test, selling icebergs, break low, pull back here. So your short is set up here and here. Down, VPOC migration. If we don't bounce up and get over here, then where am I going? Here. There's also a statistic. At 9:30 Central Time, it's something called the IB stat. And considering that we fell out and we're below key levels, we are going south of the border. So you know there's over a 96% probability-ish that we'll take out either the first hour's high or low. Does it make sense that if I see a long setup and I want to get short and I have a level that I don't get short here, but I'm looking to use this level out here, and it could be here, it could be anywhere, to get short, to come here and to take this out. So this next target. So that was a short. Look at the behavior. Now, this gets interesting. And I took a long here. And, because it's my trade plan. If this is too low, then I have this. And then the potential to squeeze out the shorts in this leg. So I took a long here. Why would I take a long here? Because this was the retail price from yesterday's RTH. And then I know that if this is too low and this is the current retail price, that I can go from here to here. And then it's just what happens next, because that's about what it is for me. So target, break. What do I see? Let's look. Microstructure. I'm going to put a line, and then I'm going to look at questions again. Right here, micro auction, right here. High volume here. This is an aggressive trade. It might not be your thing. Trend is down, so this is counter trend in my book. So, but if we hold this, then, but the problem with this trade, I'll tell you what the problem is that this is here. If this was further away, it would be a better trade, but I don't know, because this could potentially come up to the mid and the VWAP. I think that was my target on this. So let me, so along here, scale here. Yeah. And then we came back here. Now, this was kind of nerve-wracking, you know, because it needs to get above this. When it didn't get above, I assumed I'm getting stopped out. So it didn't take my stop. It was like within 2 ticks. I keep it, I don't put it right here. For this, it might be a couple of ticks, but I just assumed the trade was dead. So I get this, I pull here, there's the absorption. Remember, why did the market stop here? These sellers got absorbed. If the buyers think at the moment that this is an attractive price, if we return to it, and I posted in the Trader Lab, this is a liquidity grab. Because in other words, all we did was pop, take out the stops, icebergs were here, and we get the break and the test of this. This is the same trade. So I'm thinking, you know, dead meat. And what do? We come back here. So, and I see we're having a problem here with this. And I'm going, oh, this is not so good, you know. But as long as I don't come under here, then I have to keep the trade. So let's look at what happens. I get taken out. I mean, I scratch, and that's the end of it, you know. Now, it gets more interesting. Actually, that was my last trade. So this stuff here I haven't done anything with. Let me come up and see if you have questions. What are we doing? Oh, did we hit a level down here? Let me just look. Oh, yeah, yesterday's low. Yeah, that's always nice. Get those stops on. Okay. Actually, we have another trade set up, but well, I want to see if you have any questions first. Tony, I don't know what you mean. This is an important level, 5620. It is a higher time frame, volume point of control, an intermediate time frame. So coming down, this would be a target. I was not on it, you know, and I would not have been able to get on it. But let's look at this right here. So this is another target. If you manage to have the short, which I did not or would not, because I'd be, you know, turned around. And I would not have a way. I don't think I had a way in when we broke this. Yeah, no. So this is where, you know, once we broke this again, it just breaks away from it. So, and I don't chase a trade. If it just doesn't matter to me. Now, if you can trade microstructures, this is a consolidation, but this is kind of advanced. I don't think I'll go in. Well, let me just show you the structure. Now, we are talking about these consolidations, and the volume is in here. Right here, you get your volume. So you've got this. I'm not saying I would take this, and I'll tell you why I would have an issue with it because of this. Because this is the next target coming down. So I'm going to show you the structure, but I would not be operating with this because of this. Now, if I get under it, I might do something different. So let's see, because this is a target for me. So what do I see here? So I have chop, chop. This is the outside edge. This is actually a developing process. This is called mean reversion. And what is here? Hope I got these labeled correctly. I don't know where that one's coming from now. High volume is here. This is a potential target. That's a issue for me. Now, I break, I test it from below. This is the same as testing a VHVN, a naked volume point of control, or a micro HVN. It's all the same. So this is a support. So right here, I don't have a trade. I have this. So it's mean reversion, outside it. But I could not take, I'm just telling you me, I'm not saying what anybody else does. But when I come back to the mean in this distribution, so all these are consolidations, and I break, now I'm under here. If I'm under there and I pull back to it, it sets up a short. This is where it would fail. This is where your entry would be. And then you're going to take out the stops under yesterday's low. Notice where we pull back. See, so call it method to madness, because I'm trading fractals. So this is a short for me. It's the same as selling that VPOC, except I'm doing a higher time frame one, and I'm using these structures to kind of keep me aligned with the auction. Now remember, it's just auction. So there, take the stops out. Thanks for playing. Pull back here. Now right here, what do we have? This is high volume. Here, let me do it this way. So right here, too high against there, short. Now this is what? Chop, 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 consolidation. I have volume there, and I have volume basically there. So here. So it's either going to break low and keep going or break high. It breaks high. So now I have an outside edge and I have micro volume here and I have yesterday's low. So if we're outside of yesterday's range, then the possibility is to come back here, and if this becomes too high and I have an outside edge over here, I'm going to put another little line here. So I have reference points. In other words, I have micro volume here, I got volume here, I got yesterday's low, and I got this. So if I want, I can take a short for mean reversion, which is outside back to here. So this is microstructure. Let's put a little line on it. It happens. Let me show you. Remember, yesterday's low. There's this volume. Now this is developing. Now I don't put all these lines all over the place, obviously. I'm doing this so you could see what a consolidation looks like in a fractal. So let's just now, I'm going to draw a little box around this so you can kind of see it. So what it is I am right here. So there's the volume. There's the break. It's a breakout of this. Here's my test. This is my short. My stop is here. Now my mean reversion is this. So I'm going, this is the mean in here, break low, test, too high. I think of these like stores, like shopping, because the auction's really a shopping thing. If the buyers aren't willing to pay this, you'll notice the volume dries up. And if we break below it and come back to the retail price, and the shoppers in this store go, yeah, that's too high, they're going to get in a car and they're going to go someplace else. They're going to come back to where it was too low, which is here, right there, actually, right there. So too high, short, to here. Then it's wherever, because nobody knows where wherever is, right? So what do I know? Let's talk about what I know. Too high, retail. Take it out, going to zero. What happens here? Test. Volume is here, remember? Too high, I get my seller. But what's going on right in here? Right in here, this chop is volume. Now, in hindsight, it's clear. This looks like it's going to continue because we broke out of this, and this is resistance now. And you see the reaction to it, and this is resistance. So I got this and this. So right here, the teeth start to chatter. I have to get under this volume right here to continue. So too high, there's my sellers. And this is, and my buyers were here. So I got my buyers, I got my sellers. I got my volume. This is just nasty thing right here. So, whoa, that didn't work out. Thank you. So you can kind of see, wait, sorry about that, guys. Whoa. So you can kind of see where it changes over here. Now, there's no way to know. Resistance, support, resistance. So you see support, resistance. Right here, the trade is okay. But I can look at this and I know resistance, resistance, break, support, resistance, support. And this is my mean. I need to break under here to keep going. What does it do? It goes the other way. My stop is here. I'm just giving you an idea, Now, clueless. Questions? Oh, okay. Let's look at this right here. I'm going to clear these off of here, and we'll start fresh. Okay, you get your mid and VWAP. I have nothing to do right here. This is an area to look at. There's going to be stops here. If you're operating in the microstructure, this sets up a short right here, but you got to, for me, I consider this a high risk trade here, right? So I would not take this, even though we can rotate, go wherever we want to go. Now, why wouldn't I take this trade if I have everything? Because I have stops sitting at the mid and the VWAP. So I would not take this, even though I read a short right here. And that's not a recommendation. You can. Me, I want to get the fuel out. And I have stops at the following places: here, here, and up in here at the IB. And this is important too, naked volume point of control and below it. So this is an area to stock a short. It's not a trade recommendation. Me, I don't take this one because I'd like to get the stops squeezed out. So if I get sellers here, there's going to be stops here, here, and here. So do I have a good edge here, or is this FOMO? And I'm going to take this trade. Now, here's the thing with FOMO. You get paid sometimes, and that reinforces bad habits. Over time, that becomes a losing process. So for me, and the hard thing is, hindsight's very clear, because there are times you take a short here and it's going to go and do whatever. And that when you get that intermittent reinforcement for bad behavior without considering who's on the other side and where, then you're going to do it all the time. Remember how the casinos operate. They don't change the game. They know the games and they know where their edge is. I mean, if they made it blackjack 10 cards, maybe the house would win this time. It doesn't mean they should play a 10-card blackjack game, because over time they would lose. But if they got in the habit of getting rewarded for a 10-card blackjack game, then they would do it all the time. Even if they wouldn't, but we would, you see. So that's a way you need to think about this. So if you don't have a trade here, you don't have a trade. If you're just a gunslinger and you're going, oh, this is a short, then you got to, if you can read this and have a positive expectancy, then yeah, that's your trade. For me, at least Trader Lab trading, my trade would be up here, structured trade anyway. If you have a different skill set, this could be a short. And I'm not saying it is, I'm just saying it could be. But in Trader Lab, the structured trade is to have the discipline. Because if you don't develop discipline as a developing trader, you will not stay in the business. That's the issue, you know. So I might read a short here, but in the Trader Lab, this is not a trade that traders should take unless they're already profitable with the structured trades. Does that make sense? Yeah, CMJ, to think about the migration, you know, what really gets us in trading, you know, about this VPOC migration we were talking about earlier, is the randomness. That's the thing that'll get us. We are in a completely uncertain environment, like this short. You know, I read this as a short. But what's important about it is we know there's stops here. What might happen is, and when I say might, that's all you got is maybe. Guys, write this down. The best you have in this is maybe. Maybe it'll never get here, and maybe we will come down. Or maybe we'll get just a rotation here, and now the shorts in this leg and the shorts that have their stops here and here are going to get squeezed, maybe. What's the right answer? Well, you can't answer maybe. You can anticipate maybe, right? And in hindsight, that question is answered. Trade plan, though, anticipates behavior, does not predict it. So for me, I read a short here. I'm reading it, which is why I mentioned it to you. But in the Trader Lab, would my trade plan say get short? Or would my trade plan say you cannot get short no matter what happens here because we know what's here? And do I want to join the shorts and knowing that we might get squeezed here? That's a question. I don't have the answer for you. I will tell you your trade plan is where the answers lie, not in this one behavior. So if this behavior was located someplace else, then I would be taking a short, at least in the Trader Lab. If I'm skilled and I'm advanced, then I might be taking a short right here. You see? But in the Trader Lab, it's not about this trade. It's about the structured trades and developing the discipline and the ability to read this like I just did. My ability to read this comes from years of practice, not weeks, not months, years. Replays, intentional practice. You know, you could, Bookmap has a great replay process. You could trade off it in replay. You can slow it down to 1/4 speed, or I think even maybe slower. And you can watch the actual formation of structures. Then you do what I do and what we do in Trader Lab. Then you would be taking screenshots, circles, arrows, like I shared with you, these PDFs. All I did is I built a library of all these individual behaviors, different time frames inside of each other, the fractals, the triggers. That's what I did when I was building all this out. And I'm talking binders and binders and binders and years and years and years. Now, you don't have to spend years if you come to Trader Lab, but you do have to do the work. Because what is difficult is weaning yourself off of indicators and thinking the market is defined by an indicator. It is really defined by the auction. And then in the auction is the purpose of the market. To find out, and then what is your indicator? This is a short. What does your indicator do for you? Does it give you a short where? I don't know. Where's my short? Well, if it's in my plan, my short's in here. My stop is here or up here. You know, it's all subject to. I would be risk neutral. See what I'm trying to say? And if I understand the context, and what else do I understand? This is too high. And then am I willing, per my plan, to get short, knowing that I could just get squeezed out of here as quick as they say, like a blink of an eye. If I am, then that's okay. If my plan says this is not qualified because of this, then I follow my plan. The end of the day, it's your plan. It's not this. It's your plan. If your plan says this is what you got to do, your job's to follow your plan. At the end of the day, how do you grade yourself? Based on did you follow your plan, not the outcome of any one trade. And if this isn't in your plan and you took this, that's an error. What I used to do, I don't do it anymore because I spent years doing it, is I had something called an error cost calculator. If I made a trade up, now this is not a made up trade, but let's assume it is, okay? For me. But let's say your trade is it has to do this. And I took this trade and I made whatever I make on it or don't make on it. If I put the trade on when I shouldn't and I take a stop, it's an error. If I put the trade on and I have a profit, I deduct it. It's an error. So I had a thing I created, and it's available to everybody in the Trader Lab, called the error cost calculator. What does it cost me to make errors? And even if I get paid, if this becomes a 10, 20, whatever it is, and I get paid, it's an error. I deduct the full amount. And then at the end of the month, because I know that if this is not in my plan and I take it and I get paid for it, I'm going to do it over and over and over because I have intermittent reinforcement. And again, if this is my trade plan, I do take this trade. Hope that makes sense. Error cost calculator. You know what the thing is? Mentally, we block out the pain. By the way, we do have a target down here somewhere. 5580. Is that accurate, guys? Trader Lab, do we have an NVPOC down here? How are we doing in YouTube? Are you guys getting something from this? Hope you are. Is this an accurate naked volume point and control around 78? Guys, Trader Lab, would you confirm that for me? Because I can't see my other charts. Everything is kind of fallen out. Yes? Okay, thank you. So this is an exponential target, not a recommendation. Remember, the overnight mid and the ETH volume point and control was here. It was too high. The naked volume point and control, which was a target, became too high. We broke out of it. This might have been too low. It is now too high. Coming back here in the microstructure, too high. Potential short or not. This was the last area we were too low. Now, we never have to get here, or we might get there tomorrow or never. Nobody knows. So the fact is, what do you do now? Well, you either have no trade on, and I was going to tell you about error cost calculator. It's available to everybody in the Trader Lab. I found that my errors, and they kind of accumulate, one here, one there, 2, 3, whatever it is, we all make errors. By the way, we all make errors. I still make errors. And I work real hard on, because I get myopic. In other words, we have weaknesses. And over time, if you journal, you're going to find repetitive things that happen. So then you got to work harder. I found, and this is many years ago when I started doing this, the error cost calculator, there'd be $10,000, $15,000 a month thrown out the window. I mean, thrown away. I wrote check every month, and then I do it weekly, monthly. I would put a check on my monitor of how much I blew away. I just torched it. And you put that up on your monitor, you'll be surprised how motivated you get. And I even had it on my screensaver that I'd start my computer every morning. And I actually had one trade. I talked about this. One trade in particular where I put a trade on, I had a tight scale, and I only had like a 3-point or 2.5-point risk on it. And for whatever reason, I was not concentrating. I moved my stop on my runner to break even. Now, that's not in my plan. I just did it. And I got taken out to the tick. and then it was a 30-point trade. That's an error. So what was that worth for me? 30 points. Assuming I only had a one lot on for a runner. Think about it. Was that an expensive error? I put that in my error cost calculator, but I have a screenshot of the trade. So when I start my workstation up, that'd be the first thing I'd look at. And every time I looked at it, it really burned a hole. And I said, yeah, okay. Because it would take me back to the pain. And I put it in my error cost calculator. I'm just giving you little things because we're all human. We all make mistakes. And what is the lapse in consciousness? Who is always in our ear? Remember, Jekyll and Hyde. Hyde is that lunatic that is looking to protect us from the saber-toothed tiger. If you're not conscious and intentional every moment in this, Hyde, who's whispering in your ear, will take over. And it only takes that lapse in concentration, just a moment, and you do something that's not aligned with the business of trading. You're doing something that's aligned with running from the saber-toothed tiger, which is fear of loss, getting eaten, whatever happens, happens, right? So that's what you always have to be conscious of. Anyway, this is what we work on in Trader Lab. Trader Lab is about building out the business side of trading. It's based on structured trades that you are all that are available to all of you, plus a library of webinars. These streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, review, screenshot, and build out your trade plan. By the way, we have icebergs here. Please give a thumb up in YouTube. Click on the link at the bottom of YouTube if you're interested in visiting the Bookmap Discord Trader Lab community. There's no cost, and there's a lot of additional education that you can access. Stocks, options, crypto, order flow with a high-tier tool like Bookmap, options, market maker behavior, and a lot more. Also, there's the Bookmap Academy, where you can get coaching and mentoring. It's also available to all of you if you are a Bookmap subscriber, as well as you can access a no-cost copy, a digital version of Bookmap that you can try out. There's no cost. You can access all of this with the link in the bottom of YouTube. Please give a thumb up, guys. I appreciate you visiting the Trader Lab today. Remember, this is about the business of trading. You can download these PDFs in the Trader Lab if you're interested. There's 60 of them, and the library of webinars. Be sure to watch the primer webinar first. It's got over 30,000 views. I'm not a vendor. There's no trading course. The Trader Lab is a community of traders that have come together. If you got something, you like it, it works, bring it. If you're experiencing Trader Groundhog Day, where you're fixing and tweaking and tuning and you're always waking up in the same place, I have a webinar I did on that. That was me. And if it's you, maybe you don't have to keep doing that if it's not working for you. Thanks again, guys. Please give that thumb up. And if you're finding value from this, copy the YouTube link, send it over to some of your buddies, or give them a link over so they can access the Trader Lab. Thanks again. Look forward to seeing you soon.